Good morning, everybody. It's your girl, Maria Tolbert, here with another Self Care Saturday on my platform, the Rose Colored Movement. For all of you guys that are new to my platform, the Rose Colored Movement is all about seeing life in a promising light. And in order to push that home, I created the Self Care Saturday event to come live every Saturday and discuss topics to meet you wherever you are on your self care journey. Because I do not claim to be an expert on everything, I have had the pleasure of meeting a wonderful plethora of different people who are well versed in things from financial health to mental health. And I hope that if you keep tuning in with me every Saturday, something will hit home for you. Make sure that you subscribe and follow my pages on Facebook and YouTube. Also, how about you share? Share this with someone who you think might benefit from hearing about the different topics that we have that we will be discussing on the Self Care Saturday platform. Just to give you a note, I just currently start going live on Facebook and YouTube in 2021. So if you want to catch any of my previous Self Care Saturday lives, you'll have to go to my Instagram page under the same name, the Rose Color Movement. So anyway, how's everybody doing? I hope everybody is doing well this Saturday morning. It's a little cold where I am in Georgia. And I wanted to point out last time when I was here, I was like, oh my gosh, the year is almost over. I can't believe it. But I meant the month. I hope y'all knew I meant the month. The January was almost over. Not the year. I'm not crazy. And so February, this is our first self-care Saturday in February. And it is also my birthday month. Woo-hoo. So I hope to celebrate all month long with some great guests, and I hope you join me on this journey. I have today Janita Jackson, who is a financial and business consultant with the Infinite Potential Financial Consulting Firm. If you didn't catch us the last time she came on my platform, she actually came and discussed budgeting and credit. It was such a great time chatting with her because she provided it, like in that small frame of time, she opened my eyes and my viewers to so much information around budgeting and credit. So you might want to check that out. You'll have to find that again. She came December 26th, I think, after the day after Christmas. So you can find that replay on my Instagram page. So go follow that and go check that video out because there's so much information on there that you don't want to miss. But anyway, Janita did volunteer to come on my page for a couple more times to keep giving us that financial information. And today is her second visit. She'll be talking all about tax season. So she called it tax talk. So you guys know that is something that we all have to do. We all pay taxes. And yeah, but we're not always well versed in it. So the thing I like about Janita is that she always gives us the 411, but in a very understandable way. Have you ever spoken to somebody who's an expert on things like tax laws or financial things, and you're like, I still don't, I'm not there, I don't know what this is about? And definitely Janita is not that person. Janita definitely breaks things down into layman terms so you can understand it. I will ask that you go ahead and provide any questions that you might have for Janita. Just know that she's not here to provide any specific financial or tax advice. She's only going to talk to us generally about tax season and things like that. But if you have any questions about some specific things around your financial health and your taxes, please reach out to her. I will provide that information and contact for Infinite Potential Financial Consulting in the links below. So just stay tuned. And without further ado, I'm going to bring Janita on. Good morning, Janita.
Good morning. Good morning.
How are you doing this morning?
I am doing pretty amazing. My energy levels are all the way up. So I'm excited. I'm so excited for this. Because it's a much needed topic,
It
especially around
is.
this time of the year. And I found myself even days prior to coming here having to do live videos on my own platform, just trying to educate, assess, help individuals as it pertains to the topic of taxes because it's a huge topic. Go
It
ahead.
is. It is. And like I told them a couple minutes ago, is that the thing about you, Janita, is that you can break stuff down to the level where we're like, Oh, and they have the light bulbs and the aha moments because, like I'm telling you, I have a degree in accounting, so I have a background in accounting, and I even when I'm reading tax returns when in my previous positions, like when I worked in public accounting, and I'm like, what? Like you got to go back and read. Let me read that again. So I could just imagine that the average person might struggle with understanding what things they should be looking for, what should they be doing, and all year round, not just in January and when you're trying to file your taxes. Yeah, yeah, yeah. I heard you talking about that on your page. So I'm hoping that we could bring all that together for the viewers today. So let's start at the beginning. Which is what? Look, what is the beginning for the average person? So we could break it down into individuals and then we could talk a little bit about business.
Perfect, perfect. So for the beginning, for the average person, their tax journey essentially begins when they're hired for a job position. Part of the HR process consists of them completing, depending on what state they're in, it's their state tax paperwork. But for federal purposes, everyone has to do the same form. It's your W-4 form. Now, within like I want to say the last year, the W-4 form has changed.
Mm.
Before, you used to just be able to put one, two, three exemptions. I've actually had clients that have called me to try to walk them through the process because now it's asking you to put numbers down, and you're required to, you automatically claim yourself. But if you're going to claim your child, you have to put that in there. And if you're trying to claim additional exemptions, you have to put that in there. And it's a very special point, I think, or topic to start with, because this is usually where people have friends that talk to them and tell them, well, hey, if you're trying to get more of your money back, claim more exemptions than what you should claim, because more exemptions generally resulted in you being taxed less, which means that you receive more of your paycheck. And I
Mm-hmm.
think the problem with this is that the people that gave them this advice definitely they did not have an accounting degree, right? They were not into finances. They were just into the art, or I would rather say survival mode. I'm going to tell you how to get more of your paycheck because, when you're living paycheck to paycheck, those dollars, those cents, they all add up. So I get it.
Mm-hmm.
But they'll tell them, hey, go exempt, or hey, claiming a massive exemptions for 6 months, do 6 months on, do 6 months off, and you'll break even around tax time, especially if you have dependents. And so this is generally where most people's tax, like this is where we begin. And so you listen to them and you go exempt all year, but you single, you don't have any dependents, and tax time comes and you owe, and now you're wondering what's going on.
Right.
Or you have children, but you listen to them because you needed your paycheck. Let's face it, sometimes people need their paycheck. You needed the extra money for rent, for bills, and so you went exempt 6 months. You have dependents, but you get to the end of the year and then you say, hey, last year I got back like
Oh,
8,000. This year I'm getting back like 5,000. What gives? But you don't realize that how much you pay in taxes, especially as an individual, directly correlates to how much your return is going to be. It one impacts the other. So the beginning of the taxes is actually going to be, if you want to try to determine where you are in taxes, and this is for anybody, go and look at you can always pull up the current year's tax brackets. 2021 has its own tax bracket. Try to see where you fall, because how much you pay in taxes is actually contingent on which tax bracket you fall in addition to your filing status. So believe it or not, single people are taxed the highest, right? Doesn't matter whether it's 10%, 22%, and it's a massive jump. At one level, you're taxed 10%. Once you get to the point as a single individual where you're making like over 30 something odd $1,000, you jump from 10 to 22%. That's a 12% tax increase.
yes. Mhm.
Sometimes they're not prepared for that. And if you're doing exemptions and all of this other stuff because you're thinking about when you run the lower tax bracket, it could really affect you at the end because you're being taxed at 22%, not 10% like you thought you were. So knowing your filing status, whether you're single, if you have children, usually any dependent qualifies you for the head of household status. The head of household status is a little bit more lenient as it pertains to taxes. You can make more money before you have to transition to being taxed at a higher rate. Married filing joint, the same way. Married filing single is one of the tax statuses I have never understood. And this is in all
Married
my years
filing
of
separately.
married filing separately. Yes,
Mhm.
married filing separately is one of the tax statuses that I've never understood. Some people file that status. Usually, it's individuals that, I guess, you're married. Your spouse may have child support issues, or your spouse may have something going on, And a lot of times, and this is crazy that we're having this discussion, but and maybe you can revisit this with somebody that in the relationship room at another time. When it comes to taxes, I have seen married people be very selfish financially to the point where it makes you question where how are you together but financially separate.
Right.
I mean, I did a post one, I think it was last year, sometime of the year before on my page, and it was saying like, if you marry your husband and he owes back child support, would you file jointly with him? You would not believe how many women was like, nope, I'm not filing jointly with him. They not about to take my tax return. He's gonna have to file separately, and it's just like that's your husband.
And your
Are you
husband's
not?
child.
Are you not one or not?
Right.
Just file jointly, get it over with. But it's definitely one of those. It's definitely one of those little sticky topics where people do not play when it comes to their return. But understanding your tax bracket, like I said, it's really huge.
Yeah.
It's a huge thing. And if you shift more so if you're an entrepreneur, that's definitely something that you want to look for because you need to know what percentage are you paying in taxes. A lot of 1099 individuals or even individuals that go into the network marketing industry, taxes hits them harder than anyone else. Because before you went into network marketing, you may have been working at Kroger, you were making 8.55 an hour. You went into network
Yeah.
marketing, you are a social influencer, you excel, you shoot all the way up. And so now you're making $500,000, whereas before you were only making 8.55 an hour, but you're single. No one ever talked to you about taxes. You're not saving. You're not realizing as a 1099 employee. And this is whether these are individuals that are usually 1099 employees, not just small businesses. Anybody that's in network marketing, sometimes when you work for a job, I don't think that people understand if they tell you 1099, pay attention because 1099 means that you're responsible for your taxes. 1099 is kind of like your job saying, okay, you're a tax adult now. You're going
Mm-hmm.
to take responsibility for your taxes. So you need to be in charge of what you're putting away, keeping track of your expenses, and all of these things. And a lot of individuals don't do that. And so at the end of the year, they're like, oh my gosh, I've made all this money. I don't know what to do. They don't have anything put aside for taxes. And it blindsides them because they don't understand their tax bracket. They don't understand what percentage they should be taxed. So they don't understand how much they should be putting away. And for whatever reason, and this is small businesses included, people do not like putting aside money to pay taxes.
They don't.
They don't. You can tell them 1099 or small business, like, hey, look, get you an account, have it separate from your regular account, dedicate this account to your taxes. I know so many business owners is just like, nope, I'm not going to do that. So at the end of the year, after all of these deductions, I'm going to let you tell me what it is that I owe, and then we'll go from there versus you paying taxes quarterly because that's actually an option.
Mm-hmm.
And
That's about to ask.
if you have a bookkeeping service, and this is independent, even if you're an independent contractor, if you have a bookkeeping services, they actually will tell you like quarterly, what should you be paying in taxes,
Mm-hmm.
even if you're using QuickBooks. Like we have bookkeeping clients that we keep books for. Our QuickBooks software will say, okay, quarterly, this is how much you need to be paying. Sometimes they pay, other times they're like, nope, catch me at the end of the year. And after we deduct everything, then tell me what I owe. But
The
it's just such
financially responsible thing would be to do that because you can even do that if you have a lot of income as an individual. You can, it's like a former, right? That it'll help you calculate, and you could just pay into
Yeah,
your,
you can pay into your
yeah,
tax account.
yeah.
Yep,
Mm-hmm.
they make it so easy. It's an electronic option, so you can do it electronically. Like you
Oh,
don't have
okay.
to go like to any type of bank. So they give you options, but for whatever reason, people do not like giving up their funds ahead of time. So it's like the only time that we're willing to pay taxes is when we are a W-2 employee and when they're taking it out of our check every month. And even then, you do have the rebels that be like, well, I was just gonna go exempt for half of the year, but I forgot. And that's another thing. People forget.
Yeah.
Like they have high exemptions. You claiming 19 exemptions and it's just you. And you were gonna do it for 4 or 6 months, but then you forget, and then you hit the end of the year and you was like, whoo, I made over $80,000. I'm single and I went exempt for the year.
Mm-hmm.
Someone is going to be looking for
That money.
those
Yeah.
taxes.
Yeah.
Yeah, somebody looking for you. The IRS looking for you. The state is looking for you if you live in the state that actually collects state taxes. Because some people, I'm like, who, Texas? Y'all lucky. Florida? Oh my goodness.
They don't have
No
state
state
taxes.
taxes? No.
Oh.
Nevada? No. I love my clients there. But not because, states can be frustrating, but just because it's just like, oh my gosh. all y'all have to worry about is federal. That's pretty cool.
Yeah, I didn't even realize there was that many states that didn't have state taxes. But
Yes.
going along with that, okay, say you're an individual who claimed all these exemptions and got all this money, and you get to the end of the year and you owe all these taxes. Isn't there like reprieve? Not, you don't just want to ignore the tax that you owe. There isn't there a way for you to set up like a payment plan or something in
There
order to
is.
pay that off,
There
just so
is.
you don't ignore it.
Yeah, don't ignore it. Usually they actually give you several options when you do owe. Generally and one of the options usually consists of a payment voucher. So of course, it's almost like it prints out within the tax return. They'll tell the individual, okay, you could pay all of the amount up front if you want to, but if not, they'll try to like break it down over the course of months where they'll give you like little payment coupons that you can mail in. And but whatever taxes are due are generally due by April 15th or whatever tax day, because of what happened last year. I have to say
Yeah.
whatever tax day that they've deemed appropriate to be the end of the tax season for that particular year. After that date, that's when it gets interesting because that's when you start accruing penalties on the money that you owe. There's also a such thing as a payment arrangement, which means that if you owe a lump sum in taxes, you can actually say, hey, and they're pretty generous when it pertains to giving a payment arrangement. It's almost like getting a car. The IRS, if the amount is big enough, I'll say that they'll give you 60 months. Calculate it out. You have to fill out a form generally to either mail it in. Now because of COVID, all of my clients, I'm encouraging them to switch to virtual. You can actually go on the irs.gov and start a tax account if you owe. In order for you to start a tax account, they're going to have to verify your identity. Most of the federal agencies that I know of, and this is the IRS and the SBA, they tend to lean to your Experian credit report only to
Oh,
verify your identity. So they're going to want you to verify a credit card, a student loan, or a major account that's listed on your Experian credit report, and then they'll give you access to an internal portal where you then have access to all of your prior years, any type of notices that they've sent you. For
oh,
individuals that have issues with like identity pins, because that is a problem, identity theft has been an issue, and you do have people that have identity pins and that's just basically every year they send them out a different letter to whatever address is on file, and it has a pin number that you have to enter in order for them to file taxes electronically. If they don't have it, you cannot file that individual's taxes electronically. And whenever you have to mail taxes in, I would say 6 to 8 weeks because that's what it used to take. But like it seems like now it was taking
it's
12 to
longer. Yeah.
16 to 20 to 24 weeks in order for them to process returns when you mail them in. So filing electronically is definitely going to be the way that anyone can get access to their funds. So keeping track of these things is important. But once you get access to that inner portal, you can request a payment arrangement because that's what it is, a
Okay.
payment arrangement with the IRS. And basically, they even give you options. You can go in there, use your credit card. You can send in a check. If you feel like it's too much, there's such thing as an offer of compromise. But an offer of compromise is actually when, let's say, I owe the IRS $5,000. I'm saying I'm in a position where I'm basically financially struggling. I don't have $5,000 to give you guys. I don't make enough money to try to do a payment arrangement. But I have 2,500 that I can give you upfront. I can go ahead and request a payment arrangement, but a payment arrangement calls for you to actually fill out a different form. I believe it's 411 that asks you all of your personal business. They
Oh,
get all up in your business. So they want to know like how much you're paying for rent, what credit cards you have, what insurance that you have, because financially, I guess they're trying to assess whether or not you even qualify for them to try to take this lesser payment. So it's possible, but you have to actually be diligent. And unfortunately, a lot of people like to ignore the IRS until they get hate mail. Well, I call them nasty grams in the mail.
right. So the key is to not even get in that position, is to make sure that you are being doing your due diligence at the beginning when you're assessing how much taxes you want to be taking out, making sure you're thinking about that over the course of the year. And I know things change, so that may require you to reassess at some point during the
Yeah.
year, but you got to be mindful. I will tell you, when I went to school, my tax accounting class, the my professor was like, "You guys are always like interested in getting a refund, but that's basically your money. So the goal is to make sure that you are figuring out the exemptions that are correct so that you can pay what you owe. And then what that additional money, put it to the side. Like, why are we waiting to the end of the year to get money that we've already earned? This was his thing, that you've already earned. Make sure that your tax exemptions are correct, and that extra money, put it in savings. And then at that point, you can earn interest or whatever on your on the money that you got in excess, instead of waiting to get that one check that you gave the government to have and they're getting all the interest for. So I think I wanted to get your thoughts on that. Do you think that that's really the way to go, is to understand how much you owe so that you're not owing but you're not getting a refund? Like, why is the refund such a big like thing for people?
So we cannot tap into this without talking about mindset.
Okay.
Even if I was even as I was listening to you, I cringe inwardly as you were saying what your professor says, because so many people say that, but I absolutely I disagree. I disagree with what he was saying in terms of it's your money, because we've had so many clients over the course of the 17 years that I've been preparing taxes. Okay, if you have a mom, and this happens sometimes, you may have a mother that has 2, 3 kids. When you get to box 2 on her W-2 form, she may have paid $0.00 in taxes, right? So at that point, how is the tax return her money? She
Yeah,
didn't pay anything into
that's
the
true.
taxes for it to be her money. You have some people that pay $5. I mean, I've seen $10. I've seen so many amounts that are lesser. Very rarely, and this is just being honest, very rarely do you even have a client or individual that actually pays their full taxes nowadays. It's
Mhm.
to the point that when you see it, it's just like, you paid all your taxes? Like, but that's because we at that point, their return is basically it's credit. So
Mhm.
it's not something that you earn. This is something that's being given to you. You now have a tax return that's based off of the earned income credit, which is going to give you credit, or you're getting credit for having dependents. You're getting credit for being in school. These are credits. So it's not something that you earn for everybody.
That's
For
true.
some people that pay their taxes, yes, once if they have a family, and they finish all of their deductions, then yes, they're giving you a portion of what you got back. But from the tax perspective, the difference in that would be somebody that has one child back, right, that is getting like a return of $8,000 because they paid all of their taxes, versus somebody that has 2 kids that's getting $5,000 or $6,000 because they didn't pay any taxes.
Yeah, that's
So
true.
generally, paying your taxes definitely can. Understanding what you owe is definitely important. Paying your taxes definitely can help you, but the typical individuals do not pay all of their taxes
That's
for
true.
whatever reason. And a lot of reasons, I think it's because we're living paycheck to paycheck. I don't
Mhm.
think it's because people are just like, I don't want to pay my taxes. I think it's because they really can't afford to during the year. If my rent is a certain amount and I know that I need my check to be this much so I can pay my rent at the first, I'm not thinking about the Internal Revenue Service.
Yeah, that's
Because
true.
at the end of the day, if my rent office puts me out because I don't pay my rent, the Internal Revenue Service is not going to swoop in and rescue me at all.
Right,
They're not.
exactly.
I think they proved last year, beyond a shadow of a doubt, that they are completely, utterly gangster and cutthroat as it pertains to the world. Because even in the midst of a global pandemic, when everyone else, student loans was like, you know what, we're going to stop. Like, if we took your check, we'll send it back to you. We understand, them and child support, because child support did it too. Everyone else said, we're going to let you get your money. The IRS said, thank you so much for this nice donation that you made to the amount that you owe us. We will not be releasing your refund to you. This amount has been credited to the balance that you owe. This is how much you owe now, right? Them and child support, they were still snatching checks last year. So I don't think that people understand that that is not the agency that you want to play with as it pertains to taxes. They straight gangster. Like, we don't have to ask you for permission to take your check. You just gonna take your check.
Yeah.
And in terms of the refund, why it's so important, it's mindset. It's
Mhm.
definitely mindset. You have so many people where that's the big, and this is just being honest, that is the largest amount of money that they're going to get for the year in a lump sum.
Mhm.
They're not going to get that much for the rest of the year. And so they depend on that money. They need it. They need it for rent. They need it for gas. They need it for a move. They need it to pay bills. I've had clients that have been in so many different type of situations where you're just like, and for me, my heart cries out, because I hate that mindset. You should
Mhm.
never need your return. This is where your professor was accurate. You should not need it. This should be an added bonus. This is money
Yeah.
that you really didn't work for, so you should just be able to put it to the side, allow it to earn interest. But for so many people, that's not what it is. This is I'm gonna ball out.
A
I'm gonna go get
lifeline.
me some bundles. I'm gonna go get me a car that's gonna be repossessed in about 4 months because I don't make enough money to pay for it. But hey, I'm gonna live my life for these 4 months. I'm gonna go buy TVs when I live in public housing. And it's not saying that you're talking down on them, but this is the mindset that we are dealing with at this point. And so, in order to tackle that, you really have to tackle mindset. Some people use it to pay their now married couples that make plans with it. I think that's amazing. Please get your tax return and talk about your family vacations or how you're going to
Mm-hmm.
utilize it. That is
That's
awesome
it, but
and it's
that's
amazing.
addition.
That's
Mm-hmm.
that's 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 addition. But you have so many people that having it to the point where my tax return shouldn't impact whether or not I have a place to stay. It should
That's
not
right.
impact whether my lights stay on. It should not impact whether my water stays on. I should not be mentally in a position. I should not be waiting for a tax check in order for me to go get a vehicle.
Yes.
I
I'm with
shouldn't.
you.
And so many people do. So that is why it becomes important to so many people. Because you have some people that don't even, and then it's like only the people who actually qualify for taxes get excited. The other half of the world that don't qualify for taxes, that are always having to pay in because they're high income earners, they don't get excited. But even for them, I mean, we have a professional program where we work with individuals that are high revenue earners to try to assist them in reducing their tax liability,
Mm-hmm.
using strategy and taxes. So you have a lot of nurses, lawyers, doctors. They are not excited around tax time. I know that. Those clients. Oh, it'll be April 15th coming up. It's April 14th and a half when they schedule their appointment because they're like, I don't even want to, like, you just gonna tell me that I owe again. Like, how much am I paying you this year?
Mm-hmm.
How much am I paying you this year? So everybody is not excited about taxes. It's only the people that fall within the income to actually get a refund. And I think that the reason why mindset is so important is that, as an individual, and I'm speaking for me, it was actually my goal. I don't want a refund. Zero me out. Because if I'm getting a tax return, that means that I meet certain income guidelines, right? That state that I'm probably not making enough for the lifestyle that I want. I'm probably not living my dreams to the full capacity, right? So
Mm-hmm.
there's a ceiling to my income that I can't get past. And this is why I'm getting a refund every year. I don't want that. Give me the big money and then zero me out. I don't want to pay you, but I don't want to owe you. Yeah, I want to
Right.
pay you and I don't want to owe you anything. Zero me out. Have me in the it's just not big fat zero. That's me. But for most people, they want that kickback. They want the taxes. They want and it's so funny because as we talk about this actually was my journey when I started years ago. I started, maximizing. I studied tax laws. I got really good at what I was doing. I was helping people. I was maximizing their returns every year. And over time, I started feeling like a dope dealer
Yeah.
because it was a one-time hit. You're
Mm-hmm.
coming to me for your January, your February hit. And then after that, I worry about you, right? Because the next year you're coming to me early. I have some tax clients that start looking for me in October.
Mm-hmm.
In December, as soon as Christmas is over, I'm getting last year check stubs. You get my check stub? It doesn't matter when the IRS opens or starts filing. Did you get my check stub? We didn't even used to offer rapid anticipation refunds. We didn't even used to offer them because I didn't believe in them. Because for
Yeah.
my clients, I'm like, I want you to get all of your money. Why are you just getting some of your money? Because you can't wait. Because there's actually a certain, like, it's like a small portion that they could get without having to pay anything. So that was one of the reasons why we actually, this year will be the first year that we're actually offering rapid anticipation loans. And one of the only reasons why I even agreed to offer a rail is because of COVID, because I know that some people are still out there hurting. And
Mm-hmm.
when the IRS said that they weren't open until February 12th, which has never happened in the history of taxes,
Right.
I said, okay, that's going to put people in a position where you're used to getting this money mid-February. Now you probably
Yeah.
won't see it to March. So
Yeah.
let us try to do something so that we can help people. But we also try to encourage people. The reason why I started my journey with credit restoration, which is what we talked about last time, was because of taxes.
Mm-hmm.
I became passionate about financial literacy was because of taxes. Because I don't want you to just have a one-time hit. Let's sit down. Let's discuss budgeting. Let's discuss what you need to do differently. Let's discuss your passion. Let's discuss something that could make you pivot and position yourself to move into a different mindset where it's just not this one time high.
Yes,
People are thinking wrong, and I really want to stress that to you. If you have a gift, if you have something that you're sitting on, if you have ideas and you have dreams, stop chasing a one-time check. When if you implement, if you execute, if you just invest in yourself, you can see that on the monthly basis.
I like it. I was just going to actually say, Janita, that all the things that you're saying is just layering on top of the foundation you said the last time you came and talking about mindset around budgeting and how your credit is, because those things set the foundation for everything else. You just talked about taxes. You can budget for your taxes. That's what you're doing at the beginning of the year, being conscious about what taxes based on your income, because especially if you have a W-2, they already told you what you're making. Even if you get overtime, that's a little bit layer here and there, but you got a number that you could actually use to make a smart decision about how much taxes you want to pay over the year. And yes, it's okay, like you said, if you want to have that refund represent the addition or that extra or that plane money, but we want to make sure that you're getting that it's about financial health overall, and this is
Yes,
just a piece of the puzzle. It
yes.
shouldn't be like your number one player, like, okay, I'm gonna get this money and you living good for the first quarter and a half of the year, and the rest of the year you just waiting until, like you said, to get another tax return. So you guys, I'm telling you, you will want to go back and watch the video of or the replay of when Janita came to Self Care Saturday on December 26th. That will be found on my Instagram page. But you want to go back and watch that, because she gave us a lot of jewels about how to look at our financial health in general and how to approach like some of the things that we think is so necessary, which aren't. And this is one of them, like a refund. It's not necessary. It should be added bonus. And we want to up our potential. I just like that inspiration. Like, live your every day so that you are balling. Don't try to just ball.
Oh,
Okay,
ball
that
from under the
February
hill.
hit, I
Hey,
was like, that was profound. You saying you just looking for that hit, and that's what it is. So
it was.
the
Yeah.
next thing I want to talk about, what you mentioned a little bit, is we are in a pandemic, right?
Mhm.
Which I mean, most of my viewers, based on just the age group of viewers, have not had to file tax returns during a pandemic. This is be the first time. Is there anything else or new that we should be considering, or things that you want us to think about? I mean, one, understanding the impact of that stimulus check on your tax returns, and if you didn't get it,
Yeah.
it's another credit, to your point, that you can't, if you didn't get it and you filed, that potentially is a credit. Like, what, educate us a little bit on what things to consider based on the time that we're in.
So basically, anybody, and a lot of people don't even realize this, anybody, the standard deduction goes up every year. I'll use last year's figures for example. So if you make under $12,400, you're not even required to file taxes. I think a lot of people that may be under that income level have dependents, and so it's beneficial for them to file, and that's the reason why they do. But if you make under the standard deduction, the IRS is not even checking for you on a yearly basis to file taxes. But in terms of the pandemic, what you can look for is definitely if you did not receive. So here's the thing: the first stimulus impact payment was based off of your income at that time, but they were going off of 2018's income or 2019's income. So basically, if your income has changed, or if something went wrong, like if you made less money because you were impacted, you lost your job, and all of a sudden you fall within those tax guidelines, you are given the opportunity to, on your 2020 taxes, actually redeem one or both credits. They actually updated the software, and I don't think that people realize that when they made that law granting the second stimulus, that's the reason why I actually believe the tax season is starting February 12th, because the IRS in December, they're preparing for the upcoming tax season. Them saying, hey, you guys have to pause tax seasons to get these stimulus payments out to millions of dollars of people. This is the result. So because of that, some people were not getting their stimulus. Some people were getting their stimulus. The previous stimulus was based off of your 2018 return. What you need to understand about this, the second payment, the last one that was just granted in December, was based off of your 2019 return. So you had some people saying, I didn't get another stimulus. It's because it was based off of your 2019 return. So therefore, if you did not file 2019, you would not have received that stimulus. So nothing is wrong with a stimulus setup or anything. The IRS is basically saying, hey, don't call us, okay? We had enough of y'all last time. We don't want no smoke. But they did. But they actually updated the tax software to where those are actually two of the questions that every preparer has to ask this year. Did you receive your first economic stimulus payment? And it's a yes or no question. Did you receive your second economic stimulus payment? And it's a yes or no question. And if you answer no, then it actually tabulates based off of your current income for the current year, how much of a stimulus you should have received. It does actually consider how many dependents are also already included within the return, and it adds that onto your return for you. So if even if you didn't receive the first stimulus and you're like, oh, I'm just filing now, you still have an opportunity to redeem both of those payments on your 2020 return. I had a client who we caught up. It was from 2016 to all the way to 2019 for her. And on that last one, no, 2020 for her, because we did our 2020 already, which is we transmitted, but the IRS isn't accepting until February
Right.
12th. But on the last one, she definitely got credit for every economic stimulus payment that she did not receive. So if you didn't receive it, it's still out there and it's coming. But because I'm me, I'm also gonna give you a little bit of tough love. If you checking for $2,400, $3,800 that bad, if you're checking for $1,200, $1,800 that bad, I sympathize with you and I empathize with you. However, we need to have a come to Jesus meeting because there's something going on in your finances. We need to dig a little bit deeper. And because we're having this conversation, I'm trying to see if when I look behind me, if they're right over here. Because we're having this conversation and because budgeting is so important, this is gonna be my gift to your viewers because I know how you get. So I'm gonna catch you on live so you can't stop me. How about that? So monetizing your cash flow. These are my budget books. I'm willing to give two of these out to your viewers. They're actually hard copy books.
Yay.
So I would actually need addresses to mail them out. But you guys, like this is so huge and this is so important. If you're checking for the money that bad, oh my gosh, I really need that money. You need to get control of your finances because if you do not control your finances will control
Control.
you. And when I say they control you, like sometimes, perfect example, this is often things people do with their taxes, right? They go out and they buy a car that they can't afford. Why? You're buying a car that you can't afford because your credit is not to the point where you could just walk into the dealership and get pre-approved. Because no one who could walk into the dealership and get pre-approved and walk off a lot paying zero down is going to purchase a car around tax time that they can't afford.
Yeah.
Then you're getting this car repossessed 4 months later, which is also going to affect your credit and put you in a bad financial position. Or you move into an apartment and you can't afford furniture, but it's so big to you that instead of you going, it's okay for you to crawl before you walk. I'm going to encourage you guys that it's okay to have an apartment and be able to provide for your children and to not have living room furniture and to not have dining room furniture versus putting yourself in a position where you're going to Renter Center or Aaron's, because I believe that's the other one, and you're purchasing furniture. If you guys actually, the only way to do that, and I'm gonna tell you guys this because I do believe in giving hacks. If you're gonna pay it off within 90 days and catch them before they start adding on and tacking on that interest, get it.
Mm-hmm.
Get to it because that's how you come out on top. But if you go past that, I done paid $2,000 for a $500 couch. How is this benefiting me?
Yes, that's
How
true.
is this benefiting me? This is hurting me.
Mm-hmm.
And then please, 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 you guys, like after tax return, before tax return, title ponds, no, 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 no. Stop it. Stop it. Like again, that goes back to budgeting. What's going on with your finances? Why are you to the point where you're ready to pawn your title? Like it because your tax check gone. Now you ready to take the car that you just bought with your tax check and you're trying to pawn that title. But again, you're gonna pay twice as much or three times as much. Like they are loan sharks.
Yeah.
And I need to encourage you to kind of do your due diligence. You don't go into an economically stable area, right? And see a lot of title pawn
That's
shops.
true.
They're not there because they know that they don't need us. But if you go to an area that's socially and economically challenged, it's a title pawn shop on every corner. You need to start asking yourself, why is that? Stop falling for the okie doke. Because sometimes it's taxes, but it's so much bigger than taxes. Get control of your finances. So taxes won't be nothing. You should be able to take your tax check and just, oh, I'm gonna take this hand sanitizer, y'all. I'm gonna take this and I'm gonna just put this up and I'm just gonna let it sit. Or be strategic about your moves. I encourage you to be strategic. If your credit is messed up, take your tax check. I'm going to invest into me. I'm going to
Mm-hmm.
fix my credit. I'm going to invest into me. I'm going to, me and my husband, we're going to use this money to save up for a down payment for a home. Or
Mm-hmm.
if we have a home, we're going to use some of these funds to
Make repair.
invest in our
Mm-hmm.
home and
Mm-hmm.
improve it and make it better. Or how about this? We're going to use some of these funds, and I challenge all of you to do this one too. And we're going to invest in some stocks so my money can make me money
Yeah.
versus me having to make my money all the time. How you spend your tax check, it could affect your life. And sometimes, like, try to do something that it is at least going to get you a return on your investment. That TV is not going to get you a return on your investment. But if you take out, it ain't even got to be a lot. But if you invest in some stocks, I think the last stock it did digital or regular stocks, learn, take a class, invest. Like Airbnb is booming right now. Invest. You have people that will say, hey, I could teach you how to start making an income off a property that you don't even own. They're going out here, they're getting corporate leases on regular apartments, furnish that with your tax check, invest. Create another
Mm-hmm.
stream of income. Please, you guys. Please.
Yeah.
Please. For me.
Yeah, so that you're not calling her later when you like struggling. Take these jewels, apply them, and then you can pivot, like she said, to a lifestyle that actually allows you to be able to buy a television or furnish a home or do these things without it impacting your
Yeah.
everyday
And it's
life.
okay to save up. It is really okay. I don't know where we lost that. It's okay to save up. How am I accomplished? It's not an accomplishment to me. Like when you have to sacrifice to get it, I can remember being a mom and my daughter needed a bedroom set. I bought her a bedroom set. And in my mind, I wanted a new bedroom set, but I said, it's okay. I'll save up for it. It'll mean more to me if I save up for it.
It will.
A lot of times these materialistic items that they purchase, it don't even mean nothing to you because you didn't save up for it. It was just a tax check purchase. And so you don't even value it the same. But that bedroom set or that TV set or that living room set that you had to save up for, that's your blood, your sweat equity. You just put everything into that, or you're going to value that. But you put your feet up on my couch.
But that's too for teaching our children as well. So you thinking about you when we talk about some communities that based on our past and this kind of mentality has continued to be passed on generation to generation, what we're doing now when we work on our financial health, just like mental health, is helping our family and our generational wealth because we're teaching our children how to save, how to build income, and not that
Yes.
instant
Yeah.
gratification that is currently a status as far as our communities are concerned. So it's long reaching.
Yeah, it is. And when you think about it, it just really, it that it's always so much bigger. Anytime you touch on a financial topic, it's always so much bigger. Because when you take people don't realize when you take your tax check and you spend it frivolously, your children are watching you.
Yeah.
Money, our relationship with money or how we engage with money generally is a learned behavior. We got it from our parents. So now you have your child, they excited about getting their tax check because they want to go out and spend it too. You are transitioning, you're transferring these behaviors to your future generation.
Hmm.
You should be wanting to teach your child not to get excited about the tax check. Don't get excited about this. And then educate them on taxes. Make
Yeah.
sure that they understand about taxes so that they don't end up in a bad position. Make sure that they understand what's going on so that they don't end up in a bad position. Educate yourself, or if you don't educate yourself, at least go to a professional
Like
that
Janita
can assist
Jackson.
you. Yeah, like me. I'll say that. And the reason why is because a lot of times we can help you more than you know. I tell my clients like I get excited, get on H&R Block and then come to me. It's funny for me, or go to H&R Block and come to me. Get on TurboTax and then come to me, because a lot of times the tax laws they matter. Knowing what tax laws can impact you matter. We said that we were going to touch on small businesses. I'm
Oh
going
yeah.
to say this. As a small business, what business structure? This is how deep it goes with taxes. The business structure that you pick at the beginning affects how you are taxed later on. That means that because your friend told you to start an LLC for, that meme that was floating around, start an LLC for 2 cents and then go and get this loan. I'm gonna show you how to get money real quick. That's not what you should be focusing on when you start your business as it pertains to taxes. You need to actually be sitting down and thinking, What type of business are you trying to do? How much revenue are you trying to generate? Because I could tell you this, a LLC is a pass-through entity. It's considered a disregarded entity. So everything passed through to your normal taxes. So if you have an LLC, you don't even have to file business taxes. Everything is reported on your normal returns, more specifically, you're under a Schedule C. So most people don't realize that at that point, you're paying self-employment taxes. So when you're making under $60,000, $70,000, you paying self-employment taxes is not a big deal. But if your LLC is getting to the point where you're making $600,000, $750,000, $1 million, employment taxes is killing you. You are now in the incorrect business structure. You are now in a business structure that cannot even benefit you. If you're one of those businesses that's trying to do charitable donations in an effort to be able to reduce your tax liability, and you selected an LLC, you're in the wrong business structure, because an LLC cannot even get credit for charitable donations. Only a C corp or an S corp could get credit for charitable donations. And I say this because I have a client now. I have a new client, and we love her to death. She is a social media influencer, and when I tell you that, even for me, she has over 800,000 followers. And as it pertains to taxes, even with her, you're in the wrong business structure, because you have charitable donations that you're making or that you're giving out, but because you're in one tax structure, you're not getting any credit for them. So over $20,000 donated that you don't even really get credit for it, because you're in the wrong business structure. Stuff like that matters, because I'm pretty sure that you may have done this out of the kindness of your heart, but you also did this for a tax deduction that you're not eligible for, because you selected the incorrect business structure. So it really matters. Like paying your taxes as a business, it matters. A lot of business owners, and y'all getting all this free no charge, right? But a lot of business owners don't realize that a lot of times we have to take deductions. You definitely want to make sure that all of your expenses count. Everything that came out the wallet, it needs to count too. However, if you're getting ready to go for a home, you can't do that, because as a self-employed individual, they're looking at your tax returns to see how much income you're bringing in, not how much you're bringing in that has to go out, because you have to have all of these business expenses. So if you're going for a home, you actually have to go really light on your business deductions. Talk to your tax preparer. Either you come to us or you talk to your tax preparer about this. You can't claim everything. You need to show income so you can get your home, right? As soon as you get your home, even if you have to set up a payment arrangement with the IRS, it's okay, right? This is a temporary state. This is something that's being strategically done so we can move you from point A to point B and get you there. As soon as you close on your home, we can go back, amend your tax return, and get all the money that you left on the table, right? We can get you everything back. Before this instance, we have to move strategically as it pertains to your taxes, because you need to show income in order to get a house. Nobody is going to give you a house if you're saying, "Oh, I made over $250,000 in my business, but I only brought home $5,000 because I expensed everything out." So sometimes we also, as business owners, we have to move more strategically. It's easier to pay your taxes, you guys. Put yourself on payroll. Do yourself a favor. It looks so much better when you put yourself on payroll. And please, for the love of God, if you don't have a business bank account, I need for everybody out there with a business. Actually, the first step to building business credit is getting a business bank account. You should not have a business and an EIN and be, "Oh, I do business through my personal account." You're not even supposed to be mixing your funds like that. So bookkeeping is another thing that's important as it pertains to taxes, and I don't think enough people do it. Keeping track of your expenses, keeping track of where your money goes. You don't even realize that a lot of people, "I don't want to bookkeep. I don't want to bookkeep." Do you know what bookkeeping does? It lets you know what you need to focus on in terms of your business. Believe it or not, it lets you know what time of the year is best for your business. Bookkeeping is going to give you a financial snapshot as a business from January to February. So that's going to let you know, okay, January is my slow months. January, February, March, the first quarter is my slow quarter. Second quarter, it picks up. Third quarter, you get to actually see and map that out because you're keeping track of your books. And as a business owner, it allows you to pivot. Okay, January is my slow month. First quarter is my slow month. What can I do in this month in order to be able to move my business to the next level? What type of strategies can I input? Do I need to run a special to get more clients? Do we need to make ourselves more visible? Do we need to start going live? Do we need a social media manager? Like, you can actually do different things just because you're doing your bookkeeping, making sure that you stay on top of your taxes, things of that nature. And I know that a lot of y'all are hard headed and that y'all are never gonna pay taxes. And y'all always gonna say we're gonna wait to the last minute to see what we actually owe. But here's my viewpoint. If I was putting money, even if I didn't pay it, right? And I was just putting money to the side quarterly to pay my taxes. If I got to the end of the year and I had $12,000 put to the side to pay taxes, and I only owe 5 or 6 thousand after everything was expensed out, right? Wouldn't I be happy?
Yeah.
That's like a surprise for me. For me, that would be my reward money. Okay, let me see what I can reward myself with these funds that I put to the side now that I don't utilize them. Maybe you can use them to invest in your business or do something else. But I like to be proactive in how I do business versus reactive. I would rather you need it, well, have it and not need it, than
Yeah.
and not have it. So when the IRS gives you that check at the end of the year as a business owner, you really should just be able to cut it. If you can't just cut the $7,000 check, like, it is, something
You're
is
doing
serious.
something wrong. Yeah.
You're doing something wrong in your business.
hmm I like the advice of just taking a step back and looking at it as a yearly thing and not just looking at it as like at that one moment in time. So I don't know. I'm getting some feedback. Are you hearing me okay?
Yeah,
Are
I'm hearing you okay.
you? All right, good. So I know the time is starting to wind down. You've given us again so much good. Can you pull up the book again that you're giving away to our viewers so I can let them know? Maximizing Your Cash Flow Financial Planner by Janita Jackson. So she is being so generous to give two of my viewers a copy of this book. You know, because y'all don't never want to do none of these giveaways. I don't gotta like force y'all to take giveaways, but she's giving away two copies of these books. All you have to do is message me, or you can message her and say that you found out about her giveaway on the Rose Color Movement Self Care Saturday Live, and then she will make sure that she takes your address and sends you that book. Remember, the whole thing about we're talking about tax today, but you need to go back and watch the live about budgeting and credit so that you can layer this knowledge. And then the next time she comes, she's going to delve into business. We're going to talk about building a business credit, all of that stuff. We're going to take it from your personal to taxes. And now we're going to talk about now the future endeavors or the things she said. If you have a dream or idea to create that multiple streams of income for yourself, to do that. So before we go, let's get, I know you gave so many things, but if you could sum up one thing, just a couple of notes that you really want people to take away, do that right now before we get out of here.
What I would love to sum up, definitely is have an accurate picture of what you're doing in terms of your taxes. Become more familiar with your tax bracket. Become more familiar with how much you should be paying in taxes. And if you know that you find yourself in a position where every year you're dependent on your tax return, let's make 2021 that the last year that you do that. And I'm saying less. We can help you, but you guys got to reach out.
Yeah.
I always tell my clients that they tag me on so many posts. People tax preparer, they tag me, but I am not the typical tax professional. Because the typical tax professional just wants to do your taxes. They just want to see you one time a year. I don't just want to see you one time a year. I don't just do taxes. I change lives. So that's something that we focus on. And I would love to help you come up with a plan to budget. I would love to help you like move forward, because what you need to realize, even if you don't come to me, you can go to somebody else, but just make the decision in your heart. This is going to be my last year. I did it years ago. This is going to be my last year being broke. This is going to be my last year living paycheck to paycheck. This is going to be my last year dependent on a tax return to be able to pay bills. I'm going to put something in place so that this doesn't happen anymore. This is the last time, right? Taxes is a good topic, but you need to be trying to get to the point where you're making so much money and your lifestyle is so comfortable and you're able to take care of everything to the point where you're just happy if you don't owe. I made over $500,000. Like that's where you want to be mentally. I'm not saying I don't give my figures online. I'm telling you that right now. But you want to be in a mental position where you're like, I made over $500,000 and I didn't have to pay the IRS and they didn't have to give me a check, but I'm okay with that. Because I made over $500,000. So guess what? Your family is taken care of, everybody eating, everybody good, and you are building a table that you can actually invite somebody else at to go ahead and have a seat.
Guys, you heard it there. So again, I'm just gonna say these are the takeaways. One, go back and watch our live on Instagram on December 26th. She talked about building your budget plan and your credit plan. Then come back and watch this so you can get some tidbits to layer on. And also reach out to me so you can get her book, Maximizing Your Cash Flow, because this is not a one-stop shop. You got to think about emotional, mental, financial health as something that you have to continually invest in order to get that lifestyle that you really seek. But it's going to require work. It's going to require transparency. You got to be brave and let it all show, because you can't fix something that you hide in the closet. So you're going to have to and you can tell she's going to be open. She's going to be personable. So she's not going to shame you, because the goal for her is to make sure that her clients are able to live the life that they actually want to live. And her story shows that she's been successful at it. So you might want to reach out. Information right there. You can reach out to her. So again, Janita, thank you so much for coming on. You're always so like open and transparent, and you can't get this type of information anywhere else, like you said, for free. So if you guys are liking what you're hearing from Janita, go ahead and reach out to her. And information, I'm going to get this together, it's below on the banner, her phone number and website. So go ahead and reach out so that you can make a plan to make 2021 the last year that you're living paycheck to paycheck. All right, guys. Again, you could have been anywhere else but here today on Saturday morning, but you decided to come here, and I hope that it was well worth it to you. Next weekend, I will be back at 11 a.m. with Shauna Cox. She's going to be talking about DNA trauma and weathering, and how based on, your ancestry, you getting certain things from their experience that you're bringing and putting on in your life, similar to financial health and your way of looking at the world and your relationships and how you interact with others. So we're going to talk about that and how we can impact our DNA health. So you don't want to miss it. Thank you again, Janita. I'll see you next time. She'll be back in April. I'll let you guys know. Enjoy the rest of your Saturday. And as always, be kind to yourself and be kind to others. Bye, y'all. Bye, Janita.
Bye. Thank you so much for having me. Have a wonderful, amazing day. And you're amazing. I love your new platform. You're so awesome.
Thank you so much. All right. Till next time. Bye.
Bye.